all the different partners that have made this possible. Thank you so much to HYBR. Thank you so much to Yoli Consulting. Thanks to Knife Capital, and of course the DIT community for signing up. I see we've got a couple of participants on the call already, and we're hoping to get a few more as the conversation goes along. So thank you to everyone. I just want to briefly just introduce DIT. Keet, I know you've already had a conversation with Kopano about it, but I just want to just share a little bit more. So DIT is a community of Black founders, Black ecosystem builders, investors, and our mantra is, connect, share, empower. So the whole, motive behind us getting together is to, transfer knowledge, share learnings, connect one another to networks, so that we could, grow the ecosystem of Black founders here in this country. Yeah, we are a network that is a little over a year old now, but it's really grown extremely fast, and it's just a really vibrant community of people who are hungry to learn, hungry to ask questions, engage, and ultimately build big businesses. So yeah, that is really what the community is about, and this is our first, I guess, formal partnership in the form of a webinar series. So we're really hoping to do plenty more of these in the future, hopefully with Knife Capital as well. And we're really excited about some of the in-person events and lineups that we have alongside yourself. So thank you so much, everyone. I hope you feel welcome. I hope you enjoy the webinar and the conversation. And yeah, with that said, I'll hand it over to a representative from HYBR.
Thank you so much. I will play. So let me just. So I will just play. We've got a message and opening remarks from for our chairman, Carl Moyo. So I'll just play that video. Okay, just give me a moment.
Greetings. My name is Carl Moyo. I'm chairman.
It's not showing yet.
We are very excited to celebrate Youth Month with you. Young people in technology businesses, young people whose solutions are focused on solving some of the most pressing challenges that Africa faces. At HYBR, we are mobilizing human and financial capital to support your endeavors. We look forward to working with you. We really believe that there's a huge opportunity for you to grow your businesses while solving some of the most pressing needs that Africa has. Thank you for your support. Thank you for your bravery. Thank you for your innovation. Thank you for your commitment to solving Africa's challenges. Cheers.
I'll hand over back to you, Nzako.
Okay, awesome. Thanks for that. Unfortunately, we couldn't see the video, but we definitely heard the audio. And it was very, very inspirational. And the voice did it a lot of justice. But I think, yeah, in the interest of time, we'll just proceed with the proceedings. I'd like to hand it over to Kopano before we actually engage in the fireside conversation.
Cool. Afternoon, everyone, or evening rather. Super excited for today's conversation. Good to have you, Keet. Thank you for joining us. So I'll quickly run through what the rest of the Youth Month webinar series looks like before we dig into the one we're in today. So as you all know, today we're hosting Keet van Zyl, co-founder and partner in Knife Capital. On the 15th of June, we'll be hosting, we'll have a webinar being run by a company from Nigeria, but they have presence in Nigeria, Kenya, and they're looking to go into South Africa next by the name of Raise or Get Raise. and they're a cap table management company and startup. Then on the 22nd of June, we will be hosting the CEO of Data Free. And then last but not least, on the 29th of June, we'll be hosting the head of ecosystem and business development at HYBR. So it's a jam-packed month. All of this because of the conversations and questions we've been going into within the community. So I hope that everyone who's joined today has signed up for those sessions as well. But we will keep, asking you to sign up to look out for some of these conversations coming. So that's for the rest of the Youth Month. Maybe also just to mention before we introduce Keet, we would like to do a Q&A. I hope Nzak will help with this one, but we want to use Slido for this, just for a couple of reasons. Most important one is that you can ask a question. Well, if someone asks a question and you want to ask the same, you can refrain from doing so and just upvote someone else's question. So we'll share the link and the code to that specific Q&A in the chat section, just to make the Q&A a lot easier. So throughout the conversation in the fireside chat, we're asking you to please ask whatever questions you'd like for us to post to Keet when we get to that portion. But yeah, just resist. I know you'd want to type it out within the Zoom chat, but we're just aware that there may be people asking similar questions, and we may not see which ones are more high priority than the others. So there we go. Oh no, that's the YouTube link. Okay, cool. So I'll go into a very, very short intro of who we have. Super short, and I've kind of sold myself out on that one. But today we're being joined by Keet van Zyl, who is the co-founder and partner at Knife Capital. For those who don't know, Knife Capital is a venture capital company from South Africa, but they were very well expand to the UK, and we'll get to their international expansion quite soon. So that's Keet, but I'm not doing him justice, and I'm doing that on purpose so that we can ask the questions that we need to ask and learn and leverage Keet's amazing experience and his exposure. So Keet, welcome. I think if we could clap, people would be clapping now. Do you have any opening remarks before I pose that first question?
All right, cheers. Yeah, I think thank you. I think just firstly, very honored to be the first sort of speaker on your series. I mean, these conversations in terms of fundraising, entrepreneurship, I think you said it, your chairman said it actually in the opening remarks, of committed to solving Africa's challenges. And I think everyone around the screen wouldn't be here on an evening of their time to not be committed to solving the challenges. And I think doubly as honored to be invited by the Darkies and Tech group, which I have many friends in there, and basically to just really have some real conversations in terms of how do we actually solve this imbalance of more Black founders coming into the fold and all that. And being a white person in that thing, don't for one second think that I'm not committed to solving that problem, and really enjoy these real conversations. So let's not mess around with the questions and get to the real issues. This is my opening remarks.
Love it. Thanks, Keet. So to start off, we want to demystify the investor himself. So Keet, just tell us a bit about your background, and if you'd like, you are bringing some of your experiences that you believe have shaped you into being the person that you are today.
Okay, yeah, that's a good personal question. So let's just start there. Born and raised, but as I said, I do like the real conversations. Born and raised in Pretoria, of all places. My dad was a pilot, and unfortunately passed away in a car accident when he came back from a late flight. I think from Rio or something. He was a pilot for SAA when I was 7. So fortunately for me, I remarried a few years later. and I ended up in a place called Vereniging, so an engineer from Vereniging, which is just south of Joburg. So I matriculated in Vereniging Hoërskool. And I think the reason why I mention that is I think my early challenges that shaped my life is basically to just realize that life is short. You have to actually just take those risks and go for it. And also just a little bit, I wouldn't say fending for myself, but a little bit without a father figure. I mean, my mother was very strong, so that's why I've got huge respect for all the females in my life. So I've got 2 daughters and 1 sister, so I'm definitely well surrounded by amazing females. And yeah, so then I basically wanted to get as far away out of Vereniging as I could, because I realized that's not my future is not there. And went down to study at Stellenbosch, but also never been to Stellenbosch before in my life, to be quite honest, and sort of ended up there. And yeah, just as any student does, have fun, have this, and then basically entered the work life when I was 20 odd, and working for Procter & Gamble. So just stop there. I think the difference between, I guess my life and many people of color in South Africa is I've entered the work life with no student debt, a humble car, and never again got a cent from my parents, but also don't have never had to give them anything back, and so I got a degree, a brain, an upbringing, and I guess that is privilege to a large degree, to actually at least enter the workspace at that juncture. So it is a realization that one must go through, as a South African, to just sort of just own it. It's like, what do you do with it? Don't shy away. But anyway, worked at Procter & Gamble as a financial analyst, and P&G is a fast moving consumer goods company. I launched a few brands into South Africa, notably Pantene hair care. I worked on so what I know about hair care and beauty products is quite scary. But then joined a company called SAEDF, which is the Southern Africa Enterprise Development Fund, which invested in sub-Saharan Africa. Really realizing at that point is I must actually build my career around understanding investing in Africa. I didn't want to leave this beautiful country, let alone continent, like many of my counterparts did. I mean, I would be very bored in Australia or in the UK or in any other country if I had to live there. So yeah, but that was private equity. Spent a lot of time in investing in Tanzania, Mozambique, Zambia, Zim, Botswana, Namibia, and cut my due diligence teeth on sort of financial investments, mainly launching other funds there, but really wanted to come to Cape Town at some point. And I lived a year in Botswana actually, and then just made a call one day to say, look, this is not, my dream is not to be, nothing against Joburg, but my wife's from Cape Town and we just wanted to come down here. Came down to Cape Town, quit both our jobs and came down back here with no real plan. But we did have a fallback position, and I'll go back to the concept of a fallback position later. So yeah, it's basically, luckily a few months later, got a job at Investec, worked in the growth and acquisition finance team, basically banking entrepreneurs. From there, joined Mark Shuttleworth in HYBR Dragons Fund. Eben and I, my co-founder, and I worked together at HBD. And then at some point, many stars collided for us to actually approach Mark Shuttleworth and say, listen, can we not actually launch our own business, but actually still manage your VC assets, which he liked the entrepreneurial spirit. And one thing led to another. And on the 1st of July, 2010, we sat with our own business, so I'm not actually, or used to not be like that entrepreneurial guy, but suddenly had my own business and actually really, honestly, almost, I shat myself basically, because I just couldn't think now I'm responsible for my own future. My salary slip and all that. I mean, I had a soft landing because obviously I had the Shuttleworth contract, but and basically thought it was going to be much more easier building a venture capital business in South Africa than it was from there, because we had a lot going for us. But yeah, here we are 12 years later, with a team and an expansion and all that, invested in many businesses, but it's still very hard for us to raise capital, and we'll touch on that, to invest in entrepreneurs and take that forward. So that's the short history of Keet. But I don't know if that answers your question or not.
No, it does. It does. And I think it's always good to kick off with the personal story, just so we can contextualize you as your role in the ecosystem. So I just want you to speak briefly on that transition from HYBR Dragons to Knife, and you as a key player in the ecosystem, forming part of the core team at Simodis and some of the work that you're doing. Tell us a bit about that, and how you believe it's contributing to the ecosystem.
Yeah, I mean, it was a very different ecosystem in 2007, 8, 9, 10, when there weren't many VCs around. Angel investors were more within network, and you couldn't just as a humble entrepreneur find angels and so forth. So, we kind of, when we launched this business, as I said, it sounds a bit weird to admit, but we didn't actually know where we were going. We thought, okay, this is a good space. We believe deeply, and in any Knife Capital partner or employee will tell you that we really believe that the future of South Africa, maybe extending to Africa's challenges, lie in innovation, job creation, and growth, economic growth. Those three things go hand in hand. And the people who are interested in entrepreneurship and the entrepreneurs doing it, that's where the answer lies. Not in politicians talking about it, not in corporates pretending to do enterprise development. It really lies in all of us just doing it for ourselves. And therefore, we also didn't want to be employed. We wanted to also just have our own business, because you might as well practice what you preach, right? So, I mean, who's going to have respect for me as a big corporate VC if whatever happens, I go back and get my salary slip? So I think we wanted to practice what we preach in an indirect way. We wanted to celebrate the journey. And we also realized very quickly on that the way to do it is not to sit behind your desk and watch your inbox for business plans coming in. You have to actually speak at forums like this, connect with people who are entrepreneurially minded, and just get out there and be a net contributor to the ecosystem, which is a buzzword, sure, but it takes all different organizations, different conversations to add to the positivity that's there. And we get inspired by entrepreneurs every week. I think the other realization as our journey continued, as we invested in entrepreneurs, launched new funds, and we'll talk about that, I'm sure, and then exited some of these businesses, which is really where it's at for us, is to take businesses through the cycle. I mean, our business is VC, so our business relies on the entrepreneurs actually, getting some form of upside, or even profitability or dividends or whatever. And then those entrepreneurs that we helped got much quicker, much richer than we are, because now suddenly, you exit your business for a couple of $1 million or whatever, and we help those entrepreneurs get there. And some of them have invested back into our funds. And I think that's a key realization of Knife Capital, is when we look at an entrepreneur across the table, we look at it, the power dynamics a little bit different. Entrepreneurs feel, they kind of humbly asking for funding, and they've got this mighty investor there. We're looking at the entrepreneur saying, well, here's someone we can partner with forever, so it's not just the journey of the thing, because wherever that journey may lead, if we create wealth together, we can reinvest that wealth. And so, yeah, our future bosses are the entrepreneurs we invest in, and it's happened a few times, and that's a very nice ecosystem thing. I'm on the board of SAFCA, the Venture Capital Association. I'm on the exco, with Peter de Villiers and Matsi Medise and a few, Andile Kumalo and a couple of the ecosystem contributors on Simodisa, which is basically an ecosystem organization. And we've launched the Grindstone as a accelerator to, I don't like the word accelerator, but to basically partner with earlier stage entrepreneurs, because as you all will know, very difficult to find capital at the earlier stages of a business. And there we partner with majority Black-owned entrepreneurs, also large crop of female entrepreneurs, and that's how we create our own pipeline going forward. So I think, to answer your question, yeah, we are involved in getting out there and helping to build businesses, sometimes to invest in them, other times just to help, and with the absolute belief that is the strategy to build a brand, but it's not intentionally brand building. It's just intentionally relationship building, which then comes back maybe sometimes years later to support us, companies doing well or making money elsewhere, reinvesting, partnering, co-investing, or whatever.
No, that's good. You mentioned something, Keet, that I thought was quite powerful around, entrepreneurs shouldn't approach the fundraising table sort of with a skewed dynamic, as if asking for a donation. There is commercial value for all parties around the table. I think that leads us well into a question that I think is very important. If you can maybe walk us through what is the makeup of VC, the structure of VC, and this is to help frame our minds around when we approach these conversations. We have a good understanding that it's a value for value discussion.
Yeah, I think this, I'm trying to just not get too technical because I'll bore you guys to death and we'll see people drop off about how a VC structure works. But basically, very simply, Knife Capital is a service organization. We basically serve entrepreneurs and we serve funders. So we're the sort of the middle kind of like the glue between these two things. It's not a highly profitable business, and I'll get to the business model now as a fund manager. But where it becomes very profitable is if those entrepreneurs become successful and one pays back the funders and then shares in the upside. So there's a bit of a longer term model in that sense. But basically it works like this. So we are currently raising a new fund. We go out just as you or entrepreneurs pitch to investors. We have a pitch deck, we have a data room, and we go to investors and say, listen, we've got this great plan. We want to invest in entrepreneurs, and we need in our new fund. It's a fairly large fund in South Africa. Things $50 million, 50. It's quite a large chunk of money. I actually can't believe that we're going to get there. And then we go and pitch to investors, and then they say, look, usually we get many no's. I can tell you there is no one in South Africa that you can think of. It's like, have you spoken to? Yes, I have. Have I spoken to any pension fund, any fund manager, any bank, any corporate? All of them have rejected Knife Capital, and they say, look, it's too much risk because 1 in 10 will succeed. That this is, even if you succeed, it doesn't move the needle. It's too much hassle. How do we exit? It's not liquid. VC returns in South Africa hasn't been successful. If I look at it on a you guys might have been lucky once or twice with exits, those kind of things. But anyway, so eventually after 100 and 200 no's, we get someone, in our case, and we're very, very, very excited about anchor investors like the Mine Workers Investment Company, in Chape and Tato and Mary Bomela and that group. I mean, have backed us with this fund. The IFC, which is the World Bank, have backed us. We've got the SASME fund. We've got a few other financial institutions and international investors. And we're not quite there yet, but we're over the halfway mark and we're starting to invest. But the point of my story is, those investors commit to give us capital, but we sign a contract with them on what we allowed to do with that capital, and that means, obviously there has to be governance and all that, but they say, okay, look, I want you to only invest in South African businesses, or 30% must be invested into the rest of Africa and 70% in or whatever. It must be businesses who are post money. It must be businesses who have at least, your minimum investment size in this case is fairly large, but it must be X. In our previous fund, in our grants and ventures fund, it's less. But so we signed that contract, said, cool, we promise we're going to do all that stuff, and we've got a financial services license. And we can really get thrown into jail if we steal meaning we don't do with that money what we're supposed to be doing. We're out of mandate, we have contract breach. Then we go out to entrepreneurs and we try and find those entrepreneurs. The entrepreneurs don't necessarily know. It's a thing called mandate, and I think my first bit of pearl of wisdom is really try and understand and ask. The first thing one should ask an investor, what is your investment mandate? Because as much as Keet might like the entrepreneur, doesn't matter if I'm not allowed to invest in that entrepreneur, in terms of the metrics that the mandate allows, for different funds. In Knife Capital's case, luckily we've got 3 different mandates. We've got a seed mandate in Grindstone, we've got a Series A mandate, and now this is more of a later stage Series B mandate. But the point of the matter is, a lot of entrepreneurs feel rejected because, let's say, Knife Capital have rejected them, and there's all sorts of it's never nice, but sometimes it's just. And to give you the stats, about 1 in 4 businesses we see is in mandate. So 3 out of 4 gets rejected just because the wrong company asked us for money. It might be the right company for 4DI Capital or for Kalon or for Naspers or for whoever, but that it depends on that. So that's how it works. And just to complete the story, so we then invest the full fund, and then help those entrepreneurs grow. So we really become a growth partner because we sit on the board, we have to be active, we have to make sure they grow, we help them get clients, we try and connect. We do whatever. We count the petty cash, we go and help drown sorrows after a divorce of a founder. And we count stock, we sort out issues, we hire people, we help uncomfortable. There's nothing we won't do to just as long as we help the company advance to in the end have an exit of some sort or have a liquidity event where that business then gets acquired by. And we've got many examples, but like whoever, locally or internationally. We then give that money back to the investors. Okay, well, company 1 has exited, here's some money. Company 2, and when we've given the full fund back, then we start typically sharing 80-20. And if you think about, let's say, 100 million rand, 150 million rand fund, which is on current Knife Fund 2. Once and it sounds like a lot of money, but you invest in many companies and you usually turn that money into, let's say, 3 or 4 or 5 times if you're successful. Suddenly you're giving an extra 500 million rand back, and which we take 20 million rand, 20%, sorry, of every 100 million rand. So that's kind of why we do it, because the carrot at the end is big, but it's a long journey to the carrot. And that's why I believe VC is the right model, because we're not sitting here with massive salaries and all the rest of it. We only are successful if the entrepreneurs we invest in are more successful than we are. So it's a perfect balance of alignment of interest in my mind. But,
Yeah. Okay. No. That's understandable. So, a lot of the times your LPs or your investors will dictate where the money goes. And I know you mentioned having gotten money from the IFC, the MIC, and the SSME fund. Now, what does that mean? So if I see that Knife raised from the IFC and Knife raised from the MIC, does that have any implications on how I analyze what your mandate is? Can I specifically, pitch for a particular type of fund or stream of capital? Help us understand a bit from that side, just to, again, make it a bit more practical around when I'm looking to raise from a Knife or whoever else would be proxy as a VC. How do I make sense of your LPs and me being a fit for that?
Yeah, I think the simple question is ask, because investors should be quite clear on their mandate. It should be quite clear from their websites, but whenever I say that, I get entrepreneurs jumping onto our website and said, like, we can't actually figure out, because again, we glorified accountants, we're not marketers. So we do acknowledge that we need work on as VCs across the board on how clear that mandate is. But you can kind of get hints. I mean, entrepreneurs shouldn't have to decipher this. It should be crystal clear what a Knife Capital or any other VC can and cannot invest in. But yeah, if you have the SASME fund, like just think about that. So if you look at their website, they are the SASME fund. So they obviously advance South African entrepreneurs. They have a specific mandate of advancing Black-owned South African entrepreneurs. They've chosen to do it in a way, and I agree with that strategy, to develop some new Black-owned fund managers like Digital Africa Ventures and a few others, and invest in a few kind of, like, let's call it experienced VCs to help share deals, share knowledge, and all the rest of it. So you can kind of get a little bit of like flavor. The IFC, which is the World Bank, we definitely are very well diligenced, and we need to look at ESG, meaning we need to look at governance, and we need to make sure that we're not an impact fund, but we can't invest in armaments and alcohol and tobacco and stuff. We're an investor in for good, or for because we've got development funding institutions behind us, which basically want to make sure that we invest and we make money, but we also do it in a conscious capitalism way. We can't. So yeah, Mineworkers Investment Company. I mean, very clearly, the Mineworkers Investment Company. They are going to ask very real questions about what does the portfolio look like? How do we develop future entrepreneurs of color, and it's basically, which is an exciting prospect on how do we solve this together. But look at, yeah, so I think there's some hints there. But to answer your question, I mean, it should be crystal clear. It's not always, but I think the first question in a pitch meeting, in the intros, the first question, as much as I would say, tell me about your business, I think an entrepreneur shouldn't ask a VC, tell me about your business, because that it would like, okay, so you haven't kind of done your homework on us, and it feels, it's not about we have this complex that you should, but it's like you walk into a sales meeting, you do your homework on this on the sales pitch, but definitely ask, what is your investment mandate? Who are the decision makers? What is the decision making process? Sales 101, like you need to know, are you speaking to the decision maker? What is the process? How long it's going to take? Can they actually legally do this investment, which is just, what is your mandate? And yeah, but there are hints, and it should be clear, but it's not always.
Yeah, no, that makes sense. So I do know that, to your point, some investors or investors into other funds have specific mandates, and one that's a hot topic right now is around diversity and democratizing access to investment and so on. So from your perspective, what are your views around diversity, investing in Black founders or women founders who are women, and what do you think has gone into the work to try democratize access to capital in the landscape?
Look, not enough. Firstly, a lot more needs to go in there. But I also think one has to think about the structure of let's call it South African entrepreneurs. Firstly, whose job is it to actually make sure that we have the right entrepreneurs to invest in? So I think that, and the answer is all of our jobs: government, VCs, entrepreneurs, all the rest of it. But if you think about the structural issues with entrepreneurship in a high growth entrepreneurship, remember, like there's also township entrepreneurs, spaza shops, the biltong shop around the corner, the garage, the property. Like, remember, you're talking to a VC which is specifically looking at startups which are high growth entrepreneurs, let's say 40-50% year on year at least, and scalable, so where the revenue goes higher than the expenses. So in that game, it's a risky venture. I mean, if I had to tell my mother, listen, I'm not going to become an accountant, I actually want to go and launch my own startup when I was 19 or whatever, drop out from university, they would get a heart attack, because we don't have that culture of like risk taking, like rather go for the safe option and get your degree first and make sure, like, that type of thing. But the people who can take the risk, and remember I said sort of a bit of an earlier fallback position, are the people that kind of have a plan B or can fall back, you know. So I think structurally the entrepreneurs in South Africa that come from privilege have a fallback position, you know, so they can take an entrepreneurial risk. I mean, if that startup doesn't work out, well, what do? Move back in with parents, you know, lick their wounds, maybe say, I need a gap year, I'm going to go to Europe, and please pay for my tickets. Yeah. So I'm not trying to be facetious, but there is a fallback position, you know, whereas, you know, entrepreneurs that don't have that fallback position are better entrepreneurs because they have to succeed at all costs. So don't get me wrong, I love that more because they're more hungry because there isn't a plan B. But VC or entrepreneurs is a risk and return game. So people who can afford to take the risk kind of sometimes get to point B and to point C and to point D. And people who can't afford to take that risk in the first place just take the safer option because there's just no plan B. So I think it's just a subtle point that we must remember, you know, from a what are we structurally doing as a VC environment to so the second point I want to make around this is around relationships. So you know, people, and it's true. I mean, this is a relationship game. You know, most of the entrepreneurs that we invest in are entrepreneurs that we feel it's going to be fun to invest behind. I mean, it's a long 7-10 year journey, and I'm certainly not going to do it with entrepreneurs that feel that we don't kind of going to actually have a fruitful, enjoyable journey. I mean, there's always going to be issues, but and secondly, entrepreneurs that you know and all the rest of it. And I don't mean entrepreneurs who look and be like us, but there is your network generally is your network, you know. So how do we build out that network? And the problem is not the VC networks. The actual problems start with the entrepreneurial networks. Now, if you go back to my earlier example, how does that entrepreneur get their first seed funding check of 500,000 Rand, you know? Not from VCs, because I mean, that same entrepreneur would walk into this office and they'll get the same answer. You don't have enough traction to early stage, this and that and the other thing. Can't invest out of mandate, blah, blah. So they go to their parents or their uncle who's working at Investec or whatever, and somehow through their relationships get someone to believe in them and give them their first seed check, and that grows eventually to a bit of traction where they can kind of get VC funding. So I think the supply of startups coming through Knife Capital's door and MIC Kulisani's door, and you know, so is just more tilted towards white and male founders. And then you kind of have to choose between the supply in terms of what to invest in. So I think we need to change that structural. How do we make it worthwhile for young entrepreneurs to actually take the risk, you know? And there's a lot that government, or let's say an SASME fund or earlier stage funds or whatever, can do with mandates to only invest in those entrepreneurs with first losses, with meaning like you know, it makes it more palatable for the entrepreneurs to take that loss, because the risk of not succeeding is at least a little bit mitigated. But yeah, so what are we all doing? I mean, SAFCA just launched last month the fund management development program. 8 fund managers, I think all of them, in fact, maybe not all of them, but majority of them, Black fund managers. There's new funds that start with mandates. There's funders like the Mine Workers Investment Company and others that invest behind traditional and new funds, launching their own things. I mean, Kulisane, Tata and the guys and just announced 2 deals over the last 2 weeks. I think Rentosa was this week. You know, so there's a lot more happening behind the awareness of how do we fix 2 things. How do we get more Black fund managers, because their networks will be generally more tilted towards Black entrepreneurs? And how do we help earlier stage Black entrepreneurs to get funding and take that huge risk of failure, not out of the equation, but to at least make it palatable? So it starts with all of the above. There's no one, and if there was a silver bullet, it would be great. And yeah, I think that the South African VC market, at least, is a bit structurally biased. I think the funds are not necessarily biased, but it just, for all those reasons which I've mentioned over the last 5 or 10 minutes, there are very much clear issues we need to address. And yeah, I think we are addressing it, but it's not a quick fix. How do you develop an entrepreneur? How do you launch a new fund? I mean, it takes years to invest and years to exit. How do you create a track record? Like one of the things about Knife is we've had an exit track record. So the IFC and those guys look at us and say, okay, well, you're a successful fund manager and you're not a new fund manager. It's like, how do you say that if you're a new fund manager? So it's difficult out there, but those are some of my thoughts.
Yeah, no, I appreciate your thoughts there. And I know that we are aiming to have a bit more in-depth conversations on this. But I think this was a good segue into getting to some of the questions within the audience. I'm going to ask for Nkgopotso just to kick us off. And in the meantime, we'll be fielding some of the questions that are coming through on Slido. But thank you so much, Keet, for being open and honest. And Nkgopotso, you can take it away.
Cool. Thanks, Kopano, and thanks, Keet, again for sharing your perspective. Yeah, I think it's always insightful to have more intimate conversations with kind of, allocators of capital and key decision makers in the space, right? Because you won't necessarily say in this forum what you would on a stage at Africa Arena, right? So it's great.
I think it's more. I think these conversations are more and more happening and more important. And there's no point. I mean, we're not enemies here. We're all on the same side, right? So we might as well just acknowledge where the structural issues are, because otherwise, I mean, point one. Otherwise, we're not going to get to point two. Is like, well, how do you fix a problem that is taboo to talk about?
Yeah.
So like,
Right.
Anyway.
No, I can totally relate. Just picking up on that last conversation you had. So is this, the topic of unconscious bias, right? So let's say from a gender lens perspective, how do you think about like practically influencing and changing hearts and minds in your team as a leader who's trying to kind of change the narrative around diversity and inclusion? And so I read something by one of the founders of Albright, and she said, which is really interesting, she said that women-founded startups who are founded by women-owned VCs are less likely to receive additional funding because of the perception that they were invested in purely on the basis that they are women-owned startups. So it's still this complex thing around here. You have a new emergence of, let's say Black and let's say woman-owned VCs trying to change the narrative, but there's still kind of this unconscious bias that's really stuck in the system. So kind of what are the practical and really, hard-hitting conversations you're having with your teams and with your boards when you talk about this that you think are moving the needle forward?
Look, I think the only, as brutal as it is, this is capitalism. So remember the structure I was talking about, a VC fund, when we pitch to investors.
Yeah. So
because remember, we're not an impact fund. We're not a ESG fund. That our money is not grants. It needs to come back and have a return on investment. So there's definitely. I mean, this is a complex funding environment. There's maybe other sources which are more softer funding, but in Knife Capital's world, the only metric that counts is returns on investment. So when we can say what we want in terms of how we've invested and what we're doing and stuff, but the investors that give us money want us to make more money for them and give that money back. Now, as you said earlier, and it is well proven that more diverse boards, more diverse businesses, in fact, female founders have a different skill set around attention to detail and all those type of things that actually make for and female-only companies actually do not as well as female-led companies with also male diversity and all the rest of it. So that when we talk about diversity, we can't swing the pendulum totally to the one side or the other.
Right.
But I think I know that. So what is the conversations to have is to really say anything that come in which is female founders, which are Black-owned businesses, or anything that basically deserves heightened sense of alertness, must go through to the top of the pile. Look for reasons to invest versus reasons not to invest, and basically make sure that those reasons are solid and rooted in commercials. But I think that is just supply and demand. As I said earlier, the more businesses coming through the system, the more there's to choose from, and at the end of the day, that's going to fix the system, is to sort of prove success stories. If you have more of Zulay or Kimberly from Loop, which is our grindstone businesses, or Aisha, or like from Sweep South, or the more success stories that you have and role models you have that actually commercial success stories, the more one can kind of like hang your hat on that. So it's not as if we have to prove anything to anyone. I mean, meaning and obviously there is a lot of bias out there, so I'm not saying I'm not like blind to that fact, but the issue is not, there's these amazing businesses out there, and the funders and the VCs are choosing to not invest in them because of conscious bias. It's more those things. Is like, how do we change the narrative around awareness? I mean, it does help if you're super aware of these things. So in my case, I've got an unfair advantage gender-based because my story I told earlier, and also I've got 2 daughters. So I can. Like, it's been in 12 and 13, so they're not quite yet in teenagerness. But my goodness, as my eyes as a male opened up, and how the comments people make, and the thing, it's in there, how hard it is for them to actually break through, and to be quite honest, you have to see it, so it's quite difficult for and naive of white people, males, to assume things if you're not living through it, because we're coming from a total unfair, like naive thing. So your question is how within our team. I mean, I've got my trusty partner Lucretia in the next room there. She said she doesn't want to be on screen listening to what we say.
Hi, Lucretia.
Over there,
She
can wave at you from our boardroom. and it's basically just making sure that we have the real conversations. We drove, the 2 of us were driving in the car, on the way here and back to a meeting in Stellenbosch. So it's just basically those conversations around how do we actually attack this issue. But it's not as if anyone within. I mean, we also have Andrea Boumert, so my co-founder, early on in Knife is so we luckily have one of the top performing VC funds with a female founder in it. So that is kind of, I think the good thing is there's more female businesses coming through the system. There's more Black-owned businesses coming through the system, but you have to actually take it to them. If you like, for instance, Grindstone Accelerator, when we like, if you look at our we are in our 10th and 11th program. We're choosing the shortlist tomorrow, actually, with Keet and a couple of the guys coming down here of the 20 businesses of 10. And if you look at the diversity of the program in 2014 and 2015 and 2016 and 2017, and how it's evolved to majority Black businesses now, and I wouldn't say majority, but the shortlist is 47% female. But it is because there's more quality coming through, but it's also because we are like really hunting in the pots to force to find those good businesses, because they are there. But sometimes, as you know, and I know there's conversations. I mean, Vuisa and I have this debate often, Zach. Like this is a very complex topic, which I'm specifically interested in solving, but which is why I'm happy to freely talk about it. But I think the issue is not really what conversations we're having to change anyone's mind within the walls of and I mean, we're using Knife Capital maybe as a metaphor within any other, white-owned VC funds in South Africa. The issue is more like, shit, guys, how do we find these amazing businesses to invest in? Because all of us want to, but then it becomes the relationships and all the issues I met earlier. Is how do you just kind of, I wouldn't even say find them. It's like, how do we help the structure of the industry? Because a VC invests in what's in front of them, and maybe there are biased ways of how those businesses come in front of them. So that's not maybe they are. How do we change that? But then how do we increase the pot to choose from? So those just are the conversations, So is like, what can we do for the industry and what can we do for our business? But ultimately, we cannot invest in businesses which we don't believe that be a huge commercial upside, So I think at the end of the day, at least any business we invest in know that they've been chosen on commercial reasons, and there are other ways to do it, but that is just unfortunately the VC way to do it,
Right, that makes sense. I mean, I think you touched on something around relationships, and also, investors can really only invest in a pipeline that they see in front of them, and that's obviously influenced by a number of different things. But as a kind of founder or startup co-founder, what are some of the ways you think we can be innovative around getting in front of people like yourself outside of, say, this conversation? So how do you respond to, say, a founder DMing you on Twitter or sending you an email on LinkedIn? So we speak a lot about like networking events and, putting yourself out there in that way. But in this era of like, there's a vast array of channels through which people can communicate. What is someone like you receptive towards? I'm sure you get tons of emails and tons of, LinkedIn mails a day, but, what would you recommend?
I think that is the opportunity cost of time is the problem, and I think we're all busy, and in a world of infinite time, one would love to just have these conversations, and with entrepreneurs that just DM you and say, listen, or follow you on Twitter and say, listen, please, I need some help. But I think it does start there, I think one must try and take a chance and have and do that, and I mean, not to overuse an example, but Zanele from Welo Health, I mean, she just kind of followed me on Twitter and then sent me a DM saying, listen, I'm in trouble, but it's a good kind of trouble. I've bitten off more than I can chew. There's a contract which I've kind of won, and to be quite honest, I'm not sure how to execute. And I'm a female Black founder, and help if please, and because, as I said, our receptors are out there for businesses that we can help, but there needs to be a very clear ask, is my advice. So it can't just be, hey, can I have a coffee? Because yes, I mean, like it's just, as much as we'd love to, and it's not self-important or anything, but it is you should, but like, okay, like just frame the coffee. I want to pick your brain on a few things. It's stand in line, like it's not, and again, it's not because I'm so bloody important. It's just like, I would love to sit here all day and pick brain and impart this wisdom. But yeah, that conversation led to okay, cool, like a bit of a Zoom call and a coffee on Zoom, which was in lockdown. That conversation then led to her. I mean, she's a phenomenal. I don't know if you know her, but she's just like one of those bubbly personalities that you can't help to not want to help. And say, look, I'm in Cape Town, and I'm taking you for lunch. I'm like, okay.
Yeah.
Like not letting me not asking, just saying I'm here, I'm there, and we're going. It's like, okay, fine. And then unpacked like some more stuff, and over lunch, which you know, obviously I wouldn't ever let her pay for it. I mean, you know, from a knife capital. So anyway, the story was not that. The story is more like, and then, you know, really after that conversation, phoned Catherine, which is, I don't know if anyone knows Catherine Young from Think Room or Grindstone, but she's just also just a phenomenal executor of note, and say, listen, I need a favor, you know. I've met this entrepreneur and I can't not help her, you know, and we need to find a way to help her. It wasn't even money, just to execute this contract. And I know you've got a team that can help and all the rest of it. Anyway, one thing led to another. We've done some seed investment in her now. She's joining our Grindstone program. And I mean, some other investors are coming on board. So I think it's just a good example of just a tenacious entrepreneur that just managed to bulldoze away, with all due respect, into the diaries of people that she wants to meet, you know. So I think it's difficult, but it's possible, is what I'm trying to say. Is like, again, if and that's where maybe entrepreneurs of color have a bit of an advantage now when it comes to those type of things. I mean, it's never on the same level of, but if a white entrepreneur tells me, listen, can I please have a coffee because I've got this contract and whatever, I'm like, you know, like just, I don't know, phone your uncle or dad or whatever, you know. Like I think there's, you know, it is a little bit that way around now, where a lot of us, and I'm not saying everyone's like that, are trying to just help, you know, and if we can, we will. Mostly the issue is time. It's not that we don't want to.
Right. Okay.
So what is the best way is the best way is to frame the ask.
Take you out for lunch.
Frame the ask well. That's the best way. Just to say, like I would, but the ask is not, please, can you give me 5 million rand to invest in my business? That's not I'm not saying people mustn't ask for money, but that is not a good ask, you know.
Got you. Okay. So I mean, I would check your DM inbox right
Please.
now. I'm pretty sure.
I think with 30 people on a call, it's easy. But look, I mean, it's as easy and as complex as that. And then also, like, just to just remember that, you know, no is not no forever. People not getting back to you is disrespectful, sure, but it's not, you know, like I think one just has to remember, this is a long game. I mean, Knife Capital's story is a story of no's. I can promise you that. And so is every entrepreneurial story. One just has to find a way. And if there is a talk like this, I mean, you know, like I'm just saying, it's already easier to DM me and say, hey, Keet, I heard your talk on this and this and this. Please, you need to read this book, and can we have a coffee, or, you know, like whatever. That's at least a touch point. It's like, okay, cool. That's I mean, at least we have something in common. We've been on, you spent your evening listening to me rambling on about stuff versus the opportunity cost of what you could have done. And I need to respect that. So I think the entrepreneurs do have opportunities, but it is the gamification of the game, but there must be substance behind the game. So I think that is maybe a little bit of insight around the VC funding. It's not all what it seems, you know, like you have to get out there into the network. And to be quite honest, you know, Andrea, my co-founder, will answer this differently. People say, like, how do we get into your network and all the rest of it, you know? And it's like, but you're here, you're on the screen with me. You can, if you follow us on Twitter, you know when we're doing another talk or when we're speaking at the next Heavy Chef event, or it's not difficult bumping into me. I like a glass of wine, so you know, like I'll always be at the bar at these events. And,
is that a Chardonnay or a Sauvignon Blanc?
This is actually
so we know what to send.
This is a Delaware rosé. So okay, you know. So but anyway.
Okay.
It's not about me. It's more just about understand your target market in business, but also in the funding game. Like, how do you make sure that I meet with you? It's like, well, just find me somewhere, you know.
Yeah, got you. Okay. And so that's some good tips around, just really being specific about the ask. Obviously being as tenacious and extroverted as Welo's founder, but just like tapping in a bit more to, just like the VC landscape, etc. So I don't know if you saw recently that MFS Africa invested in an Oklahoma-based payments company, GTA.
I saw that, yeah.
And so for me, that kind of, and I think for a bunch of other people, that does raise a few questions around what this means, or what signal does this send, from a Africa-based ecosystem perspective. Because typically from a kind of deal flow or direction perspective, it's typically kind of the other way around. But now you have like an Africa-based company investing in a US-based company. Is this like an inflection point for the African investment landscape, and what does it mean for both investors and kind of founders?
Yeah, it's interesting. It's interesting to see, and it's almost a bit of an insult to our African entrepreneurs that this is news. It's like I'm also excited about it, but I was thinking about when I read that, I think yesterday, or last week or whenever, and I was thinking, shit, this is great. But then I thought, well, this is just a business buying another business cross border, as many other businesses are doing with African businesses. So I think we also underestimate our own abilities as businesses to grow in two ways. So there's the reason why it's topical for me, because we also at some inflection points with some of our portfolio companies where we could carry on growing as we are, or we could start putting money behind these businesses for an acquisition strategy. So and that acquisition strategy generally could be global, which is an interesting strategy.
Right.
But it also just depends on your value chain as a business. So because generally the trick for South African businesses or African businesses is to really own the African footprint. So when someone wants to expand out of the US or Europe or wherever, or China into Africa, they could have two choices: either expand organically or by acquisition. And that's the game that I play, is to make sure that those people buy our companies. But remember, the end is not the beginning, so that these entrepreneurs can be part of a bigger network and basically continue growing their businesses in Africa with more resources. So is it an inflection point? I think it's just a natural continuation of stuff that's been happening over the last 3 years. I think it's interesting to note that, okay, well, it's kind of the trend is going a little bit the other way around. But I think it's just maybe it's signal to the ongoing maturity of a African ecosystem that are not having to stand back for any businesses. So I'm not surprised, and I'm very excited, but I'm also a bit insulted as someone who is in love with the African entrepreneurial ecosystem, that it's such big news, or be seen as an inflection point. So I don't think it's a point. I think it's just a dot on a momentum.
Okay.
But it's cool, very cool. But, yeah.
Right. All right. Okay. So thank you for answering those questions. I think it was insightful to kind of get a bit of perspective around your thinking as it relates to, unconscious bias, how you think about changing narratives, what different kind of movements signal to the rest of the market, the rest of the globe. So I do want to move on to a few questions that we've gotten from the audience. I know there's some questions that have been polled on Slido. So Ntsako, do you just want to bring those up?
Okay, so do you want me to go through some of them, or do you guys want to facilitate some of the questions, or yeah?
So yeah, so I will just facilitate based on what's on there.
Yeah. So these questions have been voted on, so you can see that the ones that have the highest votes have risen to the top. So I think let's just go top to bottom in a sort of quick draw manner. So we can't really go too in depth just for the purpose of time. But yeah, let's just go. There's only 5 here.
All right.
So yeah.
So I think the active initiative to have more pre-seed funds, yes, for sure. I think some of the so if you think about the SASME fund, they've invested in more, either some university technology funds, some earlier stage funds, some pre-seed like Savant, that is more hardware accelerator. But look at some of their funds, because they've done a Moneyball approach, investing in like later stage VCs, earlier stage VCs. I think the problem with pre-seed, and not to make too long an answer of it, with pre-seed in general in South Africa, is we don't really have a spray and pray investment approach, so as an investment, as like a VC environment. So in other ecosystems, you can just with light due diligence invest in 50 companies, and 1 or 2 of them may become unicorns, so the other might really fail, or a lot of them, and some might be okay, but then you've got these like chances of shooting stars. I think we've got a more like balanced approach, and I really love our entrepreneurs building more substance than hype, but it does lend itself to very difficult to choose pre-revenue seed ideas that's going to really make it, and I'm honestly, I'm talking from someone that you would think would be able to call it. So meaning if I had to invest in all the pre-revenue, pre-seed type ideas that I thought was just the best thing ever, I would have actually lost a lot of money, because it's in the execution in terms of how those things do. And I think I sort of know what I'm doing, it's very difficult to invest in this environment because of the spray and pray approach versus invest in substance approach. And how do we know there's substance? Because there's a client. It's not good news, I know, for entrepreneurs around the screen to say, well, now how the hell do I get funding if I don't have revenue and I can't prove traction? Because I'm sure everyone who's raised funding is sick of the sentence that you need more traction. So yeah, there's a hell of a big pool in pre-seed startups. There's the Startup Act, which the Medisa and some of us are spearheading. Whether we ever enact it or just get government to get a sensible initiative around pre-seed and how do we support entrepreneurs and incentivize angels to invest, or whether we just facilitate more angel investment going into startups and specifically more Black-owned startups, because the angels and the startups, there's a relationship disconnect just because of I don't like the word relationship or whatever, but it's more, where do you find those angels, and how do you facilitate the platforms to get more? And it's not about a demo day and a pitch session. Those things help to bring the stories to the fore, but it's about giving the startups a platform to enable them to raise capital in front of entrepreneurs. So there are definitely active initiatives within the SSME fund, within SAFCA, within the Fund Manager Development Program, and within the Startup Act. But yeah, I think we are an immature VC environment, so don't underestimate. It's very, very hard for Knife Capital to build our business, and we are experienced, so how do new funds do it and all the rest of it? Should a startup try to self-fund, bootstrap, or revenue fund as long as possible before get VC funding? I would say yes, because your valuation then becomes better. So if you do seed funding, you must do it in an instrument which is a convertible sort of safe agreement, or anything like a convertible instrument, without getting technical, versus a price round. So we're sitting at the moment with an entrepreneur where an angel put in 2 million rand, and that's great that she got that capital, but the angel took a 55% stake in the business. So now we sit with a company that's actually owned by an investor, and now we need to invest at the next round, and we're negotiating with the investor to take some of their money out so that they go down back to, and then give money back to the. So there's structural issues with doing price rounds early on. So therefore, if one can bootstrap, it just mean if your clients like your product, and they sometimes can revenue fund it in a way. So one of our most successful exits was a company called OrderTalk, which was restaurant online food ordering software, which we sold to Uber Eats. Now that business, its first couple of clients, they managed to convince the client that the need for this product is so big that the client must pay them a year, or one client paid 2 years in advance to say, I really love this product and I know you're a startup, so I'll pay you today for 2 years. And that was quite a cool validation of the product market fit and need and problem solving. And secondly, they could delay the funding process. So by the time we got involved, the business was more valuable. How do we begin to democratize access to funding, access to opportunities? I think the good news is that the VC funding model is also being disrupted, meaning big funds, people and personalities like us lot, basically in terms of the angel lists or the crowd-funded ways. I mean, the way we're also thinking about future fundraise efforts is also thinking it's going to be not big pools of $10 million here and $10 million there. It'll be more a whole lot of the crowd to invest in the VC funds, which have networks, and there's a marketplace developing. There's some legal and financial license issues around all of that, but I think that the process is going to be democratizing itself, and also the more successful. Unfortunately also maybe not good news, but it is changing, over time. So the more successful Black founders become, and they get to their exits, their networks that they will invest in would be, more than the next crop, and so the cycle will over time start. And the question should be, how do we fast track the democratization process that is anyway happening? That's the question. And yeah, I think we've touched on some initiatives, but it's never going to be fast enough for this country. It's not going to be fast enough for any people around this screen. I think government could play a role, but we know that they have other issues of hiding their money under their beds versus putting it behind entrepreneurs. What's the typical holding period that Knife has for investment? Early stage investments, so seed, Series A, if you invested those rounds. Yeah, so we invest in seed rounds. So maybe, while I've got you, I can kind of just sort of take you to our deal wall. So you won't be able to see all the logos and all the rest of it. But, in terms of this is our fund 1, fund 2, this is our fund. But over here is our grindstone cohort kind of businesses, which we're starting with Grindstone Ventures into seed rounds over here. We've got Welo there, AgriLogic, Drive to Earn. There's actually a few logos which are not on there, and these are all our Grindstone kind of, well, not all of them, but some of them, and then some of our exits over there. So, but the question is seed rounds to Series A. I mean, how long does it take? So typically the process to exit is 4 to 7 years, maybe 5 to 7 years in South Africa from a holding period at Series A level. If you then do a seed round to exit, it's probably around the 7 to 10 years of holding period, But yeah, the answer I want to give you is 4 years. But it takes, as you know, it takes a couple of 2 years or so to really find the right product market fit, another 3 years to really build the business to scale where it becomes worth it to exit. So the answer is 4 to 7 at Series A, and if you add a seed round, maybe another 2 years on that. Post-revenue startup. Okay, so let's just say, do you look at the size of their revenue or how fast it's growing, and also what's the minimum revenue you look at? To be quite honest, the only thing that we say, and it is, and remember, this is not everyone has this mandate, is we just want one client, so because we asked that client 5 questions. Why did you use this? Why did you choose this product? And who else did you consider in this process? So then we know about competition. We ask them things like what is the, and it's always an interesting answer, like what is the actual core problem that this company solve for you, and what is the the core value proposition for you, which is actually quite different to what the answer that the entrepreneur will give is like, what is our value proposition for the company? And the other two questions we asked is, if you were what things would you do better, or what is the weaknesses in the product? What would you improve? So we get sort of improvement of things. And the last question we asked them is like, well, if you were the CEO of this business, what would you focus on for the next 3 years? So then we know the strategic direction that we should go in. So if we can ask sort of those questions to a client, and it could be one client, or it could be a sample of 3 clients, but that's, and the reason why is just because we know that then the product has at least a chance of a product market fit. It's very difficult to understand why would someone would buy this product on paper versus speaking to someone who has bought the product in practice, because that last 5% of integration is like we all as entrepreneurs make a lot of mistakes in thinking it is what it is. But if you've sold the product to someone, you know, 1 rand of revenue is the answer, just so that we can speak to a legit client, just because of that. So, but again, this is knife. So and that's our mandate, but it doesn't mean that we don't help pre-revenue businesses to get there, or that we can't kind of refer them, or in personal capacities, or other angels. You know, we have a few hundred investors in our 12J funds, which is a whole different conversation, and those investors are, you know, look for things to invest in, and they like entrepreneurship, etc. And how does one get access to that to democratize that process? But so those are a run through of the questions, but you know, those might not be the best answers for your you know, like chutzpah. And if you are a pre-revenue startup, where do I start? Well, you basically start by thinking, how do I actually create a product market fit? How do I convince angel investors or earlier stage investors or government funded technology innovation funds or whatever it is to assist? And so forth. Karabo, did you have I saw a hand up and down again, so I'm not sure if that was a question or a thing. I know you've been active, but
Thank you.
Oh, cool. Yeah, look, I mean, I think this is an exciting space, and the entrepreneurial journey is hard for all of us, but at some point, you know, you break through it. And remember, you know, and again, remember that I have, or had, I suppose, a plan B. I can move in with my mother if it all went pear-shaped. But at some point, Andrea and I had to not take salaries for a few months. We had to we had houses and bonds to take money out of to pay our staff members. We had to, you know, kind of work from our lounges because we couldn't afford an office. You know, we had to have one car. Again, we had a car. So there's a lot of privilege in that conversation, but the thing is, it isn't without some form of sacrifice, and the scale of sacrifice is much harder and more for Black-owned founders. And I think that concept of privilege, it's a South Africa-wide problem, so I don't want to bring that into a VC problem. Versus, it's hard for people to have the conversation, and for specifically white people to kind of really understand the conversation, because as Karabo mentioned, you know, like there's lots of unconscious things and stuff we do wrong, but even the ones that are trying are messing it up. So you know, but it's fun, and we've got a long way to go as an ecosystem. But you know, it continues with conversations like these, this demystifying the process, and just say, hell man, as long as good humans are trying, and we do it kind of startup by startup, we'll get there, you know?
Yeah. Keet, thank you so much for your time. We appreciate you taking the time out to chat to us, and you know, we're taking notes. We intend for this conversation to, yield some action points that we can follow up on, see how we can contribute to some of the initiatives.
Yeah, so maybe just to follow up on that just quickly. I know we're out of time, but I also said like specifically the Darkies and Tech group to I mean, we're going to have a session in Cape Town and in Joburg over some drinks at our office here, and we'll find a space in Joburg at either Kandua's office or one of our portfolio companies there, or wherever, and just have some conversations. Continue the real conversations. I mean, we need to get that access to. We need to democratize. We need to do all of this, and you know, we don't have the answers. So you know, you are going to help find the answers, and we're going to make a difference. But you know, like again, you're talking to an evangelist who loves the startup space, and I think we've got a lot to offer. But look, I've also been in the game for 15 years, so I can sense there's a change. So that's all good.
Love it. I see there's a lot of comments around interest in the in-person meetup. So we'll definitely organize for that. Send out comms in time. So just look out for that. But once more, thank you from the DIT, and thank you to HYBR as well for organizing this conversation. I'll hand over to Yoli, who will close us off.
Hi, everyone. Thank you so much, Keet. It's really, I mean, things have really changed. I think the fact that we can have these conversations and was just also really important. And also thanks to the DIT team, Kopano Nonzako, just for working with us and making sure that we can extend this invitation to the greater community and thank you so much. And we look forward to what the month will have for us. And I'll just share some posters so that we can see, so next week we're going to have Get Raise. And so they're based in Nigeria. So we know that this is not just a South African problem, this is an African problem. And so the conversations will not only just be, with South Africans, or it will also go beyond. So we've got to Kingsley and Ozzy who will be joining us for next week. And so if you've not registered yet or booked yet for next week's session, please feel free to do so. So we will have some females as well in these conversations. We're actually also going to have Tina. So I'll possibly also update these posters. We'll also have Tina, who's the co-founder of Get Raised. So they'll be joining us in next week's conversation. So other than that, I just want to say thank you to everyone. And Vu was in Joburg and flying back to Cape Town, so he couldn't join us this evening. But otherwise, we just want to say thank you to everyone, and we hope this was fruitful, and we'll continue to grow in the DIT community. I think most people that are here are from DIT. So Keet, look forward to those drinks, both in Cape Town. I'm in East London, sure. Unfortunately. I would have loved to join all of you for those conversations. So otherwise, thank you so much, Kopano. Thanks, Nzago. And I'll hand over back to you, Kopano, for any other comments.
Yeah, I think my final comment from my side is just well done on what you guys are doing. I think that DIT groups and stuff is very important. To just have the conversations there that we can bring and to conversations with other ecosystem players and also support groups and those type of things. So I really laud what you guys are doing, and if I can support in any way, I'm there.
Thank you so much.
Yeah, thank you everyone. Enjoy the rest of your evenings, and we'll see you